Hello traders and welcome to another video review. Today is Thursday, June 16th, 2022, day after the FOMC decision, the Fed interest rate hike. So, what is going on the financial markets? Well, let's find out, but first, let's dig into today's calendar. GDP data and employment change data from both New Zealand and Australia had been released. Overnight, GDP of the New Zealand shrank to minus 0.2%, way below the forecast of 0.6%. Very interesting. And employment change in Australia hikes to 60,000 people. The key event of today: SNB, Swiss National Bank interest rate decision for the second quarter. Made a little bit mess on the financial markets because it's been a totally surprising move by the SNB. The hike was to minus 0.25% from minus 0.75%. So now, big surprise for the market participants. We are waiting for the European Central Bank to follow. SNB monetary policy assessment and the press conference are scheduled for release both at 10 and 10:30. That's about it. During the London session, the most important events during the London session are Bank of England interest rate decision at 1 p.m. Market participants expect a hike from 1 to 1.25%. Of course, Bank of England MPC meeting minutes, and then during the New York session we got the building permits, Philadelphia Fed manufacturing index, and initial job claims data scheduled for release 2:30. All of this data are from US, of course. So one more interest rate decision today, Bank of England. We will see how this will be played out. So we should definitely take a look on the US dollar index because of the yesterday's Fed interest rate hike by 0.75%. We'll take a look at the Swiss franc and then at the British pound. So let's start with the US dollar index. Daily time frame chart of the US dollar index is still showing us signs of a strength. Yesterday it did move a little bit down, first time in 5 days. However, it made a new higher high, or even the swing high. 105.75 is the new high for the US dollar index. The drop was towards the 104.63, just below the technical resistance at 105.01. However, today we are having a nice green bar. Maybe what the market is doing right now, but this is just a big maybe, is of course the triangle pattern and then breakout to the upside. Please notice the fact that we are still under the influence of the bearish divergence between price and the momentum. The last high was not made on the bigger momentum than the high than the previous high. Okay, so potential bearish divergence. However, we are still trading horizontally, possibly making a triangle for a last push to the upside and then correction. Let's find out what's going on with the Swiss franc. Swiss franc is going lower. The Swiss franc is reacting on the interest rate hike. As you can see, we broke below the level of 1. It was Swiss franc was equal to the 1 US dollar. Now we made a new local low at 0.9784. So 9,784 pips. The next technical support, as far as I'm concerned, is located around the level of 9,554. Let me just put it on the chart. There you go. That's the next technical support. Of course, we got another supports here at 9,473 and at 9,377. There is a technical resistance around here, just a little bit below the level of 1.0062. So this is the key level. However, we might have a double top pattern and it's really obvious we got bearish divergence here. So please very carefully observe the area between 1.0062 and of course 9,542. This might be some sort of the consolidation zone, but breakout below this level, 9,542.44, will give us another move back. Oh, sorry, not this one. I meant to. There you go. This should go off. There you go. Another breakout below 9,542 will give us a very nice and sharp decline lower, of course. We recently put a kind of a channel here. However, it's not appropriate anymore, this channel. We got very big acceleration channel here, then decline, then test, bounce, and now the question is whether we're going higher above 1 or this is a double top. Well, we will see in the future. For now, the outlook is bearish. Just before the interest rate decision, British pound on a daily time frame chart looks very heavy. The recent bearish engulfing pattern, of course bullish engulfing pattern made yesterday due to the ECB, due to the Fed interest rate decision, it looks okay. However, today's market behavior, of course, doesn't look that much optimistic anymore. We still have the level of 1.2254. This is the technical resistance. We've been inside of this channel. Now we are way below of this channel, so we don't need this one anymore. That main channel might be extended, right? Okay, because it's important, and it looks like this decline here towards the level of 1.1933 was made on the extremely oversold market conditions, so the bounce is welcome. However, the level of 1.2255 must be violated, and then 1.2158 must be violated. The 1.2158 is the low from the 13th of the May. So it's roughly one month ago, and this, as you can see, this level is causing some trouble for bulls as they don't have enough momentum to carry on. However, let's stay optimistic and let's stay focus on the current market behavior ahead of the Bank of England interest rate decision. Any hike means market will be buying British pound. Any hike more than expected, not from 1% to 1.25 but to 1.50 or 1.75, will cause a massive spike to the upside. Just like today's hike on the Swiss franc by SNB, of course. So please keep an eye on this market behavior, because it's very interesting. And the last but not least, almighty euro dollar, the pair that has been mostly traded on the Forex market. Yesterday price action during the FOMC interest rate decision, and as you can see, we got the low at 1.0360, just above the key technical support. However, nothing happened. Market didn't went up, market didn't went down, closed very close to the level it started yesterday's rumbling. So today we have an inside bar so far, at least, but it looks heavy. It looks like the red candle will be the candle that will show up at the end of the day. Maybe even the market will close below 1.0343, because it looks like a market is unable to break and close above 1.0472. This is the local technical resistance. So euro dollar looks heavy and might follow the path of the least resistance below the 0.0343. The next target would be around the level of 1.0300. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.